The new Coronavirus Aid, Relief, and Economic Securities Act, or CARES Act, was passed in early April 2020. As part of this legislation, there was an important update to the QIP tax law. In this module, we will review some of these changes that will benefit commercial building owners who have recently completed property improvements or are planning to do so in the future. This module is not intended to be used in place of advice from a tax professional. For specific information on the tax advantages that you qualify for under the updated QIP tax legislation, please consult a tax professional. Before we discuss the recent changes to the QIP tax law, let's get back to the basics. What is QIP? QIP stands for Qualified Improvement Property, and is the term used by the Internal Revenue Service to describe most interior property improvements made to a commercial building. Now let's take a look at the recent laws around QIP, starting with the Protecting Americans from Tax Hikes Act that was passed in 2015. The PATH Act established qualified improvement property as a new asset classification. Under this act, property owners could write off up to 50% of the cost for property improvements in a single year and depreciate the remaining 50% of the cost over just 15 years. In 2017, a law to further incentivize property owners to conduct qualifying property improvements was included in the Tax Cuts and Jobs Act. However, due to a legislative drafting error in the QIP legislation, it resulted in the opposite effect. The law was intended to allow property owners to deduct 100% of the cost of the qualifying property improvement over just 1 year, but the error caused the depreciation period to be over a span of 39 years, leaving very little incentives for property owners to conduct these improvements. As you can imagine, businesses and energy advocates have been working with legislators to make this correction ever since the error was made. This brings us to the most recent changes to the QIP tax legislation. After more than 2 years of advocating for the correction to the 2017 Tax Act, the opportunity to correct the error finally arose with the 2020 CARES Act. Now property owners can write off 100% of the cost for qualifying property improvements in just 1 year. Since this change was rectifying the previous legislation's error, it is also available retroactively. So any property owner who made qualified property improvements since the beginning of 2018 may be able to file an amended tax return and receive a refund. So you may be wondering, what is considered qualified property improvement? Well, QIP includes any improvement made to an interior portion of a commercial building after the original date that the building was put into service. QIP does not cover things like building expansion, any elevator or escalator related renovations, improvements to the framework of the building, or exterior renovations, including exterior lighting. Long story short, among other things, interior lighting and controls improvements are fair game to qualify for the QIP tax cut. Some new qualifying items that were added with the recent legislation are fire protection, alarm systems, and security systems. Another common question surrounding the new QIP tax law change is, can the 179D commercial buildings energy efficiency tax deduction be claimed for equipment depreciated using QIP? The answer is no. Since the equipment under QIP is depreciated in the tax year it is purchased, an additional tax deduction would not be eligible for that equipment. QIP will most likely be more beneficial because all the equipment is immediately depreciated, creating greater cash flow for interior lighting improvements than the 179D deduction. Using the QIP depreciation does not require any special documentation to validate the energy performance, so it is much easier to file. The 179D deduction can still be used for lighting equipment in new construction projects. Also, any labor associated with an installation meeting the 179D requirements may be eligible for this deduction. The 179D deduction is in effect through December 31st, 2020, and may be updated and extended beyond 2020. Let's look at an example of the savings a building owner may qualify for under the new QIP tax law change. Meet Bob. Bob is interested in completing several renovations in his office and retail building to increase his tenant satisfaction. These improvements include things like new lighting, lighting controls, a new security system, new flooring, and paint. In all, he estimates his renovation costs will total around $1 million. Bob has heard about the new QIP tax law under the CARES Act and wants to see what tax savings he will qualify for under the new legislation. This will help Bob determine if now is the time to complete these renovations. Bob met with his tax advisor, Ted, and together they determined that all of his planned renovations are qualified property improvements under the new law. To see the impact of the new QIP tax law, they first estimated Bob's taxes under the previous law established with the 2017 Tax Cuts and Jobs Act. Their estimates show that Bob's renovations would have resulted in a $25,641 tax deduction, leaving Bob with a profit of $1,585,385 after taxes. Bob and Ted then calculated Bob's taxes using the new QIP legislation. Bob was able to deduct all $1 million of his renovation cost, leaving him with a profit of $1,790,000 after taxes. That's a difference of $200,000 that Bob would save under the new QIP tax law. This helped Bob make the decision to go ahead and start his renovation and improve his tenant satisfaction. And that's not all. Since Bob is updating his building with Acuity Brand's lighting and lighting controls, he's not only saving money on his taxes, he'll also see a big reduction in his energy and maintenance costs. For example, by replacing his 3-lamp T8 lens parabolic troffers with the Lithonia Lighting 40 lumen BLT troffers that include in-light occupancy sensing and daylight harvesting controls, he will see energy savings of up to 83%. He will also see an improvement in tenant satisfaction as the new lighting will increase the light distribution and cut out the glare of the previous luminaires. Bob has also decided to choose Atrius-enabled fixtures for his retail spaces so that he can leverage the Internet of Things to collect data, track assets, and improve the customer experience with wayfinding through indoor positioning. Best of all, Bob can meet all of his lighting and controls needs with a single manufacturer, Acuity Brands. And since all of Acuity Brands' lighting and controls are tested for quality and compatibility, installation will be a breeze, and the solution will allow for continual change as Bob's business reorganizes and expands. Are you looking to do some renovations on your commercial property? Work with your tax advisor regarding upcoming or recent property improvements to see if they qualify for the new tax advantages under the updated QIP tax law. If you've been postponing your commercial property improvements, now may be the time to get started. Reach out to your Acuity Brand sales associate to learn about what lighting and controls products can help you maximize your savings in your property improvement project.